Ladies and gentlemen, good day and welcome to KIMS Hospitals Q3 FY23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Securities Limited. Thank you, and over to you, sir.
Hi, good afternoon, everyone. I am Rahul from IIFL Institutional Equities. I welcome you all to the third quarter earnings conference call of KIMS Hospitals. From KIMS, we have with us today Dr. Bhaskar Rao Bolineni, Founder and Managing Director, Dr. Abhinay Bolineni, Executive Director, CEO, and Mr. Vikas Maheshwari, CFO. Over to you, sir, for your opening comments.
Good afternoon and a warm welcome to all of you. Few days ago, our Honorable Union Finance Minister presented the annual budget, which augurs well for a stable economic climate. Increase in capex is the defining feature of this budget. It aims at a fiscal consolidation while also delivering good growth and inclusion and also cleaner and greener future. Let me now come to our own financial results of KIMS for quarter 3, 2023. The financial highlights. Your company recorded a good performance with a steady growth as can be seen from the following results. Current quarter includes 3 months of performance of Nagpur Hospital, post-acquisition of Mrs. Stanley Medisech Life Sciences Private Limited, effect from 1st September 2022. Consolidated revenue from operations grew by 42.8% year-on-year basis, rupees 5,621 million. Consolidated adjusted EBITDA, excluding other income, Ind AS adjustments and one-off items, grew by 14% on a year-on-year basis to rupees 1,470 million. A consolidated adjusted EBITDA margin stands at 26.2%. Ex-Nagpur stands at 27.2%, an improvement of 0.1% in quarter-on-quarter basis. Recent acquisitions, that is Sunshine and Nagpur Hospital, have shown sequential improvement. One of its items, the EBITDA margin for quarter 3, FY23, Sunshine EBITDA stands at 21%. Nagpur stands at 11%, which is very encouraging for our team working on ground to turn around the acquisitions. During the quarter, company has acquired additional stake in 3 of its subsidiaries, 1.92% stake in Sunshine Hospitals, 4.07% in Kondapur Hospital, and 7.79% in Srikakulam Hospitals. Going forward, we aim to acquire further in these units. During the quarter, the company has disposed of one of its subsidiaries, Surya Teja Healthcare Private Limited, Sunshine Karimnagar Hospital, to focus on core markets in Telangana. Our operational highlights, both IP and OP volumes have registered growth. The IP volumes increased by 26% year-on-year basis, and OP volumes have grown by 36.3% year-on-year basis. On quarter-on-quarter basis, there is a slight decrease in volumes by 1.7% due to festive season. However, OP volumes grew by 1.7% on quarter-on-quarter basis. The average revenue per operating bed and the average revenue per patient have registered increase of 28.6% and 12.8% year-on-year basis. On a quarter-on-quarter also, there is an increase in 2% and 1.1% respectively. I am glad to share that KIMS continues to attract patients from all parts of India as well as from abroad on account of its affordability and clinical excellence across all the departments. The new unit of Sunshine Secunderabad Hospital is in final stages of completion, and we aim to shift to this new state-of-art facility by financial year 24. Projects undertaken at Nashik Greenfield project and a Bangalore semi-brownfield project are progressing well and are expected to be operational by financial year 25. Vizag Gastro unit is ready and will be operational by financial year 24. We rolled out applications that automates operational workflows, including financial counseling, relationship management, queue management, among others, for greater operational efficiencies. The expansion plans, as you know, the expansion is meant to build up increased volumes by wider reach. Our expansion strategies are spurred by strong balance sheet position and aimed at spurring stronger balance sheets by value creation. We are always guided by the prudent financial discipline and a dynamic optimism to optimize the returns to our investors. The clinical achievements: in a first of its kind in India, doctors at KIMS Secunderabad removed a liver weighing 12 kgs. A rare case of insulinoma was successfully treated at KIMS Secunderabad. An unusually big tumor of 23.7 kg was removed from uterus by a surgical oncology team at KIMS Secunderabad. A 3-year-old boy with heart complications operated successfully at KIMS Cuddles, Kondapur. A 7-year-old gets a new lease of life after a series of lower limb surgeries at KIMS Vizag. First ever simultaneous liver and kidney transplant was done on a 50-year-old patient at KIMS Vizag. KIMS Nagpur doctors removed an almond stuck for 2 days in an 11-year-old boy's lung successfully. Rare cartilage transplant surgery was performed at KIMS Kurnool. First ever kidney transplant was done at KIMS Ongole. First ever balloon venoplasty was performed at KIMS Savera, Anantapur. In a first of its kind in Andhra Pradesh, a 92-year-old woman got a stent implanted in a flat 10 minutes time. A 95-degree bent spine successfully corrected at KIMS Sunshine, Hyderabad. Though it does not pertain to Q3, I intend to share with you about India's first interstate inter-hospital kidney swap that took place few days back in Hyderabad at KIMS and Viranchi Hospital. The two couples are from Chhattisgarh and Telangana. 4 surgeries were performed simultaneously on the couples with video streaming in a real time. The wife's kidney was transplanted to the husband of the other persons respectively. Swaps have been placed earlier in the same hospital at Mumbai, but this is the first time to be done at 2 hospitals. This may set a good precedent for increased number of transplants. It is also an awareness I am giving to our investors, where a lot of people are suffering with the kidney problems, where when there is a donor is not available, this method can be used. As regards new technology and equipment, I am glad to inform you that we have installed ortho robots for total knee replacement and hip replacements at our KIMS Secunderabad and Kondapur. This technology will lead to increased precision and reduced recovery period, and we hope that it will be extended for all our units in the need arises. Academics. Now that the COVID is behind us, our academia is in full swing. Our doctors from various departments participated in a number of international forums and presented their papers and won plaudits and prizes. Dr. Seta Jayalakshmi, Senior Consultant Neurologist, has been awarded the prestigious A.B. Baker Teacher Recognition Award by the American Academy of Neurology. She will be honored with the award of the 75th Annual Meeting of American Academy of Neurology, scheduled to be held in April 2023 at Boston. Department of Rheumatology, KIMS Secunderabad represented India at the American College of Rheumatology Annual Conference at Philadelphia, USA in November 2022. This conference is attended by over 20,000 rheumatologists from around the world and is the most prestigious rheumatology scientific meeting in the world. Our residents were the only rheumatology postgraduates from India to have oral presentations. This is the first time in India has presented in these esteemed scientific sessions in ACR. Department of Rheumatology, KIMS Secunderabad diagnosed a patient with Vexus syndrome in 2022. This is a new and extremely rare disease discovered in 21 with less than 30 patients worldwide. Our case was first in South India. KIMS organized an international convention of neuroendoscopy and heart and lung transplant at Hyderabad with overwhelming participation of experts in respective fields from across the world. This kind of involvement in global forums will enrich professional expertise and help us serve the patients better and provide enhanced medical care. Apart from the tremendous work our consultants and residents do, we emphasize and encourage them to take part in academic and research work also. Since it will lead to a good quality care to our patients, this is a continuous journey. We encourage our students as well as consultants to participate in national and international conventions. These will ignite their passion and ambition and their return to provide world-class health care to the patient. Not only do we participate in such forums, but also organize and host international events like international conventions of neuroendoscopy and heart-lung transplantation mentioned earlier, wherein we invite world-renowned experts in respective fields to stimulate exchange of information. We show them our hospitals and get their inputs to continuously improve our patient care, which ultimately gives us a lot of mileage in reaching more number of patients. Why I'm mentioning all these clinical achievements and academia contributions is because we firmly believe that the best clinical care given to the patients will bring in more number of patients. The revenue growth has to be generated from increased by volume and not by charging heavily. Volumes and not tariff should lead the growth. Under the aegis of KIMS, various programs were conducted to create a breast awareness program during the month of October 2022. The Breast Cancer Day is observed on 13th October every year. I thank you for your continued trust and support. I assure you that we will keep growing with all the passion in serving the patients and protecting the interest of investors. As I keep saying, you are our growth engines, enabling us to sustain our relevance, progress, and vitality. Thank you. Over to Rahul.
Sir, should we start the Q&A session? Dr. Bhaskara?
Yeah, we can start. Yeah, Rahul.
Yes, we can start.
Perfect, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Mr. Sagar Shah with Phillip Capital, PCG. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity, actually. First of all, I would like to congratulate for a decent quarter, actually. So, my first question was related to our Sunshine performance, actually. And I was curious to know, but since you have already discarded the Karimnagar Hospital, and you said in this first quarter of in the third quarter of this FY23, you're going to shift your existing Secunderabad Hospital to the new Begumpet Hospital. So first of all, I wanted to know about that progress, and secondly, an overview that in going ahead in FY24 and even ahead, because since Sunshine is a major growth driver for us, what kind of performance are you expecting from the overall unit as a whole? That is my first question.
Is that the only question, or you have a follow-up question on that?
No, I follow-up questions also, sir.
Okay. So as far as Sunshine performance is concerned, we're pretty optimistic on the overall growth. It's just that, there are two facilities, one in Begumpet, one in Secunderabad, and one in Gachibowli. We have been able to make good progress in bringing new consultants. But why you see the growth kind of stable and not significantly improving is because we've replaced a lot of the high-cost consultants who were there at the time of acquiring the hospital with younger consultants and consultants that come in at a reasonable cost. So I think that exercise has more or less been completed. And now there are only one or two departments that we have to fix and few more consultants that are due to join. And once that happens, which should be completed in the next 2 quarters, we will then be able to see incremental progress as far as the Gachibowli facility is concerned, which is currently at a 30-40% occupancy. With these incremental departments getting added soon, it should get to a 60-70% kind of an occupancy, which we foresee will happen in the considerable, probably by in FY24. As far as Begumpet or Secunderabad is concerned, like we always mentioned in our previous calls, the current facility is not in a position for us to attract good talent, and it will not be able to scale the hospital in the current as-is form. Hence, we decided to go and build a new facility, which we will move in from April 15 and completely move in by. And once that is complete, the occupancy in the Begumpet facility is around 40-45%, but has a considerable chance to go up to 65-70% over the next 18 to 24 months once we move into that facility. We have identified the gaps in the clinical talent. We have already identified some clinical talent who are also going to join only once we move into that new facility. So with these two leverages being utilized, I think the occupancy will go up. And once the occupancy goes up, I think the margins will be very similar to what we are seeing in our Telangana hospitals or AP matured hospitals. We are pretty confident once it hits that 60-70% kind of an occupancy, we will be delivering similar margins. We're pretty confident that Gachibowli we will get there in the next 18 months, and Begumpet once we move in, which is anticipated to happen by mid-April or end of April. And then from there, 18 to 24 months, we should hit that kind of occupancy and margins.
Okay, so basically we are going to move to the, as I heard it right, we are going to move to the new facility in Begumpet by April 24, right?
So this year April. So in another 2 months, we should move into the new Begumpet facility. It's slated for April 15 to 30th. So I think this quarter we will lose and transitioning into the new facility. And from then on we can start seeing.
So basically, can we assume for at least for the entire FY24, from currently at 39% occupancy rate, we can at least expect, at least we can move the occupancy rate to anything between 50 to 60%? Can we assume? Is it right?
So I think if you look at it on a quarter-on-quarter basis, the last quarter you can see hitting close to 50-55% occupancy. But if you have to look at it for the full year occupancy, it may be a little unlikely. Because we will transition into the new facility, then we will start bringing new doctors on board, and it will take that much time for the ramp up to happen.
Okay. Got your point. So basically, we are at least looking for the recovery will take even longer than FY24, if I heard it right. So, sure.
Sorry, could you come again?
So basically, the recovery for Sunshine occupancy, so basically will go even later than FY24, right?
We're in FY24 and FY25. You will see the Sunshine Hospital peaking to how it is currently in Telangana for KIMS or our AP matured. That kind of occupancies and that kind of margins you will see in FY25 in the full year.
Oh.
You will see considerable progress in the coming quarters. but you will see the full year peaking happening in FY25.
And obviously the ARPOBs will be less with it as you are including the multi-specialty mix over there, right?
Yeah, it'll be in line with our Telangana hospitals. Maybe actually a little higher because it will still have considerable revenue coming in from orthopedics.
Got your point, sir. Got your point in that. Okay, now second point 5, my second question was related to Kingsway. So Kingsway, we are at that very initial stages. If I exclude the one-off, we are at almost at 11.4% EBITDA margin, and the utilization levels are very high. So I wanted the outlook that what exactly do we intend to do with the Kingsway Hospital? What do you, where do you see Kingsway Hospital in the next 1 year or 2 years?
Sure. So currently the operational beds are still lesser than the total bed capacity that we have. So when you look at the occupancy, the reference is to the operational beds and not the total bed capacity. So what we believe is Kingsway in the current shape and form without further capital deployment will be able to scale to around 20-22 crores of revenue per month, which is around 240 to 260 crores of revenue per annum. Now we are currently at an average of 13 crores, 13.5 crores. So we're addressing around 6.5 crores. And the way we believe that will happen is by bringing in new clinical teams and new clinical departments that are not currently present. So we have in the last quarter seen 3 people join. Of the 15 doctor plan that we have, 15 to 20 doctor plan, we have 3 people who have joined. We believe by end of this quarter, or no, actually the end of first quarter, we should have signed off on most of the doctor recruitments, and we will see them join in the second quarter, and from then on you can start seeing incremental growth. So I think in the next 18 months, 18 to 20 months, we should get to a 20 crore kind of a number as far as Kingsway is concerned. That will happen because our operational beds will move to the full utilization and bed capacity, though the occupancy percentage may remain same. And typically at a 20-22 crore kind of a revenue, we anticipate that the margins will move up because we are now sitting on an operating leverage. Every incremental revenue that flows in, a significant part of that will flow back into the EBITDA.
Okay, sure, sir. So basically, as you said, for Kingsway, our operational beds are at around 250 beds out of our 334. So do you intend to increase the operational beds in Kingsway?
Yeah. So the beds are fully installed. It's just that we have to equip with the right manpower and then start work. So as a new doctor start joining us, we will start and the volume and occupancy start increasing. We will do the ramp up.
Okay. So basically, for on EBITDA, you can say on EBITDA, or since your operating leverage will play out, since you add more clinical trials into these. So any ballpark number in Kingsway, are you targeting anything like currently at 11.4? So are you targeting at least 20% plus EBITDA margins in the next 18 months?
Yeah, absolutely. So like I said, we are in that operating leverage at this point in time. On 13 crores of monthly revenue, we are delivering 11%, 10% kind of a margin. There is operational efficiency that we will bring in at the 13 crore revenue base. But from now on, every incremental revenue, a significant part, 50 to 60%, should get added to the EBITDA.
Okay. Got your point, sir.
One is at the 13.5, we will do a lot more operational optimization, which will happen over the next 2 quarters. Plus the incremental revenue will further optimize the EBITDA margin.
Okay, sure. The next question was related to our NCDs. Actually, we raised around 300 crores in this recently. So wanted to have a clarity on that what exactly are we intending to use this money actually in the near future? Are we looking for acquisitions, further acquisitions? And if yes, in which state? Have you shortlisted anything?
Sagar, Vikas mentioned this side. This 300 crore rupees NCD proposal is the proposal which we have taken is the enabling provision, because to raise the funds through NCD, you need to have a shareholders approval. So we are keeping this approval ready. So we are doing the capex and expansion program at Bangalore and Nashik, and we are keeping those funds. If it is required, we will raise the amount from the approved amount of NCD, which is 300 crore rupees. So as and when the funds are required in the multiple tranches, we may raise this fund. So as on date, we are just keeping it as a enabling provisions, and as and when the funds are required, we will raise from that. At the same time, since we are the growing company, and if any opportunity comes which is available at a reasonable price, we can use that amount also for those acquisitions.
Thank you. Sorry to interrupt. Mr. Sagar Shah, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Mr. Piyush, individual investor. Please go ahead.
Hello. Am I audible, sir?
Yeah, you're audible, Mr. Piyush.
Yeah. Sir, just wanted to check on the new hospitals which currently we are doing capex in Chennai, Mumbai and all. What is the current development on those hospitals?
So I think pretty much all the hospitals are on the scheduled timeline that we have circulated in the presentation. But Bangalore, both the hospital is going on track. I think we should be operational by the first quarter of next year, much sooner than what we had originally anticipated. Nashik also should be operational by the end of the coming financial year, again sooner than what we had anticipated. Chennai at this point the greenfield project has been put on hold, but we are looking at some acquisition opportunities. Nothing concrete yet, but if anything happens, then that will be a good starting point for a 250-bedded hospital in Chennai.
And these new hospitals, whenever they will start, so from the day one or maybe a 6 months or year, they will contribute to the EBITDA margin of the KIMS and AP mature assets, which is like 27-28% type of margin, or initially 1 or 2 years the margin will be subdued, and once the ramp up happens, then only they will be able to contribute those type of margin.
So Bangalore, Nashik, Chennai may be difficult to get to that kind of a margin within the first 24 months. But hopefully after 24-36 months, we should be able to trickle towards those kind of margins, at least low 20s kind of a margin.
Sir, last year overall we were doing a EBITDA margin of around 30-31% or something. Now we are doing this 27-28%. So is it something 27-28 is a base, and the last year margin were one-off or some good quarters or good numbers, or can we think there is a room for expansion to the margin to again come back to reach that 30% level?
No. So I think we are pretty confident about maintaining that 30% level. If you ask, that's why in the presentation is very clear. If you look at last year, we only had KIMS with us. We didn't have Sunshine and Nagpur. If you look at KIMS, even today, we have been sustaining the 30% kind of margin. Now, because Sunshine and Nagpur got added, revenue came in first. EBITDA expansion will happen over a period of time. That is why you see a dip in the EBITDA margin at a consolidated level. But what you should appreciate is both AP acquired, AP mature and Telangana have been sustaining the margins that we have delivered in FY22. Once Sunshine and Nagpur scale up, you will see the similar profile for the entire group. But again, you will start seeing Bangalore, Nashik and these hospitals come in. So I think it's better to break up and look at the acquired, the mature ones and the turnaround one. As long as we are in the trajectory to get to that 25-30%, that's the right way to look at it than to look at it at a console level.
But Nagpur, Kingsway and Sunshine are in the lower EBITDA margin. Because of that, the blended EBITDA is going down from 30% to 27% type, correct?
Yes. Because if you look at the KIMS portfolio prior to the acquisition, continues to maintain the 30% margin.
Yeah. One more thing. There were some promoter pledge with respect to real estate business. There the last con call also it was said that promoter is are in the process of selling some assets and reducing that pledge. Any update on that?
So
He is actually on the job. I think maybe another next 2-3 quarters. That is the taking into one of the sale process. As soon as the
so my point is only not about pledge. My point is the only thing. This separate real estate business will not impact this KIMS hospital business. That's the assurance type of thing which we want to just take.
No, not at all. Not at all. There is no time spent by the KIMS team into that real estate.
Okay. Okay. One thing on this special mix of this. Sir, this organ transplant business has reduced in this 9 months or something or this current quarter, because earlier what I remember it was contributing around some 5-6%, maybe because of some abroad specific treatment was happening or something.
So transplant as a percentage, the contribution has come down. Is that the question?
Yeah. Just trying to understand, is that come down to 2% for 9 months? Is it reduced in the current quarter or something? It will again come back to level of 6 to 8%? Or what type of growth you are seeing this in people coming from abroad for surgery and all?
So as far as international patients in transplant are concerned, that is regulated completely by the government. So even historically, we've had very little. We had no international footfall for transplants are concerned. Most 99% of the work is only domestic because it's highly regulated on how it needs to be handled by the government. So the transplant program this financial has been going good. Only difference you've probably seen in FY22 and in this financial year is that last year the number of transplants that happened remained the same, but the medical management of cases that happened prior to transplant because of COVID or the ECMO related cases that happened during COVID were substantially higher than what we were seeing this year. That is why the shifting.
Yes.
So during the quarter in which we shift, there will be some disruption in terms of revenue and cost because we will be maintaining costs on both centers for 2-3 months before the full transition happens. So that quarter there will definitely be some disruption. But after we settle in, that is from Q2 of FY24, we don't see it should continue to be very similar to what it is today.
And in terms of occupancy, how the occupancy would move? Because that shifting to new facility would have the larger number of bed, I believe.
One larger number of beds. It's a more prominent facility from what the current Sunshine facility looks like. It's a new facility. The look and feel of the hospital will be much better than the current hospital. All of this will enable us to attract more clinical talent. So we have identified a requirement of close to 20 clinicians that have to be joining Begumpet Sunshine once the facility is ready, and that 20 doctors will be onboarded within 12 months after the hospital is fully operational, and we can see a full ramp up of those doctors, or full utilization of doctors. Once they join, it will take 12 to 24 months for us to see that. So that's how we are saying in the next 12 to 24 months, we will start seeing significant growth in terms of the ramp up that happens at Sunshine. And a lot of the insurance companies have agreed for a price renewal, which is similar to that of KIMS, only when Sunshine moves to the new facility, because otherwise they don't see why they should do a price hike in the current facility. So that will also further increase the ARPOB and pricing.
So current bed capacity of roughly 600 would be expanded after shifting?
No, it will remain more or less the same. It is not about the beds, it's more about the support infrastructure that is currently lacking at Sunshine, which is what we are fixing in the new facility, and it's because it's at a much more prominent location, it will just enable to attract good talent, clinical talent.
And also this Karimnagar we have divested this 75 bed facility, so accordingly you have to adjust the beds going forward.
Okay, because in Sunshine we have ARPOB, more than double what at consolidated level we are achieving, despite our EBITDA margin has been lower. So what I want to understand that after shifting, whether on EBITDA side I can understand that initially there may be some disruption, but going forward, can we expect that with a new facilities or new technology there, our EBITDA margin will have some significant improvement after, for example, for 1 year or after a gap of 1.5 years?
After we move to the new facility, you will see, over a period of time, that is over the next 18 to 24 months, the margins are trickling up, and it will over a period of time reach the Telangana KIMS kind of a margin profile.
Okay, understood. And in Nagpur, what kind of occupancy we can expect next year?
Next year, see, the usual time it takes for us to go in and settle in is usually it takes a year's time before we can actually show significant improvement, because by the time we go meet with the existing doctors, talk to them, they come back to us on whether they want to continue services, they want to move on, we identify new clinical talent, they consent to come on board. It's a process that usually takes, with Sunshine we have seen, and in the past hospitals.
Please enter your PIN.
It usually
Your passcode has been confirmed. Please wait while you are joined to the conference. The conference is now being recorded.
Hi, am I audible? Nagpur, November. So it will take us that 12 months time before we start being able to recruit the right clinical talent. Once the clinical talent is onboarded, it takes anywhere between 12 to 24 months for us to really see a good turnaround there.
Okay, now why I'm asking that already 70% occupancy in Q3 we had in Nagpur. So max to max we can increase it to 80-90%. And
no, sir, what is there is the bed capacity is 334 beds. What is operational is 250 beds. On 250 beds, we are at 137 occupancy. That 137 can actually go up by an incremental 80 beds being occupied. So 80 beds at a 30,000 ARPOB is a significant growth.
Okay, understood. Fine. That's it from my side. Sorry, one more question, if you could allow. Just a moment. On CapEx side, this year, how much CapEx we are doing? Because your presentation shows some 400 crore towards the ongoing projects or brownfield projects. So how much has been spent and how much remains to be done in FY23?
So there are two ongoing projects right now, which is Bangalore and Nashik, and we expect on those two projects to spend at around 250 crores of the amount, 250 plus some gastro projects and other equipment, etc., which is going on. So it should be at around totaling to 75 crore rupees. So that is the amount which looking at 325 to 350 crore rupees of the capex this year.
And for next year?
It should be of the similar amount coming up.
Okay, so what we look at the free cash flow, it seems that there would be some elevation in debt if you go at this rate of expansion, or you will internal accrual would be sufficient to manage this?
So we are generating something like that 400 crore rupees of the internal cash every year, and you should take the view of the 3 years because the company is still young, very solid balance sheets, the clean balance sheets, very low debt right now, and we are generating a very healthy cash flow for the next leg of the growth. We are looking at Bangalore, Nashik, and other opportunities which we have listed in the Western Central India or Chennai whenever it clicks. So if you look at that trajectory, I think will be generating something like that 1,200 rupees of the cash, and that is what is the capex plan. Though right now the firm plan is Bangalore and Nashik, for which the capex is going on. The balance, as and when it materializes, will be taking up those projects. It may be a greenfield, it may be a semi-brownfield, or it may be a acquisition. So based on that, we will be doing the capex. So we are not looking at very high increase in the debt. It will be a very reasonable type of debt if it comes, because the capex happens first. If it is a ready project or the semi-brownfield, the land and building cost will be incurred first. So depending upon the projects which we are taking, whether it is a greenfield or semi-brownfield, the debt will come.
Okay, nice. Thanks for explanation. Thank you. That's it from my side.
Thank you.
Thank you. A reminder to all participants, to ask a question, you may press star and 1 on your touch tone telephone. Our next question is from the line of Mr. Rahul Jivani with IIFL Securities Limited. Please go ahead.
Yeah, hi sir. Sir, on Sunshine, if my numbers are correct, then our IP volumes for the quarter have declined 20% sequentially. So what has driven that decline in IP volumes at Sunshine? Is it the closure of the Karimnagar facility?
One, certainly the closure of Karimnagar facility, Rahul. But like I said, as a process, when we get into a hospital, there are few high-cost doctors that we want to talk to. There are some visiting consultants, which is against the practice of KIMS, which we want to let go of, just to bring in a system and process. So that is what we have started doing at Sunshine after multiple rounds of discussion with the clinical teams to decide to either come full-time or to continue part-time. So some of those initiatives, and we have let go of some credit companies where we are not seeing a fair tariff being given to the company, which is what we receive at KIMS. So those are few of these, because of those initiatives and steps, we have seen this decline. But after that, after those steps have been taken, we have seen that some of these agreements got renewed. Number one, some of these doctors have decided to come on a full-time model. So the January month has been good. The December month also has been good. There has been some disruption in October and November. That has been, I think, when the Q4 results are out, you will see that level of correction happen.
Sure, sir. So with you moving to the new Begumpet facility from April, you think the current muted performance which you are seeing on Sunshine, that should start reversing?
Yeah, because we have not been able to take, except for Gachibowli, which is only 20% or 30% of the Sunshine revenue, we have not been able to take considerable steps at Begumpet at all, given the limitation of the facility and the timeline to move the facility. Once that happens, you will start seeing growth happening from this. Once we shift, that is in April, May.
Okay, and what happens to the existing campus of Sunshine at Begumpet? So you would divest that off?
Yeah, we will. It's a leased premises, so we will move on from there.
Okay, sure. And sir, now if we look at our base business occupancies, which is excluding Sunshine and Nagpur, our occupancies this year have been, let's say, 400 to 500 basis points below what we were trending in FY22. So what has led to this, some sort of in our existing base business occupancies, and how are you looking at your base business occupancies going into FY24?
Like we said, Rahul, like we've always communicated, for us, the occupancy as a percentage is irrelevant parameter. We just because that's what is expected. But if you look at the dip in ALOS, there has been a considerable dip, close to 10% dip in ALOS, because of which you will see a dip in the occupancy. But the volume growths have been considerable and have been consistently growing year on year. I think that is what we are more worried about, and this is what we track as a parameter. So if you annualize this year, we should be at least at around 58,000 to 60,000 kind of a occupancy at Telangana. Volume, IP volume at Telangana KIMS, which is a very strong indicator that we are growing by volume and not by pricing. So as far as occupancy is concerned, it's a function of multiple parameters. Usually it could be the case mix could change, or the ALOS comes down, or several of those factors.
Sure, sir. So what has driven this sharp reduction in ALOS for you?
We have always been consistently working at trying to reduce the ALOS, right, and be a little more cognizant of the fact. And as and when the season picks up, automatically there's pressure on the system and the ALOS comes down at a point in time. But otherwise, we are also taking cautious effect to see how we can bring down the occupancy of the hospital, or occupancy per patient of the hospital.
Sure, sir. Last question from my end before I join back the queue. Can you update us on your plans with respect to the Maharashtra or the Thane market, the asset which you have been looking there?
The answer remains the same, Rahul. We have not been able to make much progress there yet. Like we said, it will take 2 quarters, even in our previous discussion. Hopefully by end of this quarter, we should see progress there.
Sure, sir. So if you can just let us know, where is this process stuck? Because we have been hearing about this thing for past 2 to 3 quarters now. So where are the bottlenecks lying?
The bottleneck is supposed to receive authorization or a letter from the government, which is a condition precedent for the transaction to move forward. We are waiting for that document to be. We're waiting to receive that document, and given that it is beyond our purview to be able to control a few of these things, we are also just having to wait for it. And there is a commitment that it will be delivered by end of this quarter, but we have seen that commitment in the past also. But let's just give it some more time and see that it happens.
Sure, sir. Thank you.
And we are planning to evaluate a lot of parameters are there on this one Thane project. We will come back to the next quarter results, the 100% decision.
Sure, sir. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Our next question is from the line of Pritesh Chheda with Lucky Investments. Please go ahead.
Sir, thank you for the opportunity. What growth drivers do you have in your base business of Telangana and AP mature?
So as far as AP mature are concerned, now both AP acquired and mature have reached a point where they are very similar in terms of the revenue contribution from each department. But there are some small fixes that need to be done, which will be done in course of time. But where we are seeing significant growth that will help us double the bed capacity, double the revenue over all the Andhra facilities over the next 3 to 5 years is the addition of new specialties. So we have, if you compare Telangana profile of clinical specialties to Andhra, we have seen a big vacuum in oncology. We have seen a big vacuum in mother and child, vascular surgery, interventional pulmonology, and few other clinical therapies. So our agenda now for growth to happen in AP is a lot of these new clinical therapies, introduce them in those existing hospitals, bring the right clinical talent, and then be able to scale up those hospitals, in addition to the marginal growth that will happen in the current specialties that are already there in AP. We want to add these new specialties that will help us continue to grow for the next foreseeable years. As far as Telangana is concerned, again, it's between Kondapur and Secunderabad. So our aspiration is to see how we can bring Kondapur to the level of KIMS Secunderabad. Because of limitation in space in the current hospital, we have not been able to add a lot of doctors or a lot of new clinical therapies that are existingly present in KIMS Secunderabad. So once we introduce those specialties, once the new facility is onboarded, we will then be able to see growth happening in the Kondapur facility. As far as Secunderabad facility is concerned, again, we have again, if you benchmark even within our hospitals, mother and child is not a very big specialty in KIMS Secunderabad, not even as big as what it is in KIMS Kondapur. So now we are taking steps to address that and increase the footfall in this hospital. Vascular surgery, pulmonology, a few departments that we have identified where there is vacuum in Secunderabad also today. We are bringing the talent and we are onboarding them so that we are able to grow by volume in this facility.
Do you have the infra to do all this, or the infra is fully utilized? Because one is you can add all these services, but then when I look at the bed capacity or operational beds, or maybe the OR, then from that angle, is there a scope or?
Yeah, so as far as Andhra is concerned, there is absolute scope in all our hospitals where we can add all of these facilities. In fact, in few of the hospitals, the capacity addition is happening as we speak, and introduction of cancer will also happen over the next 12 months. As far as Kondapur, very clearly a new 500-bedded, incremental 500-bedded hospital is getting added. As far as Secunderabad is concerned, there is headroom for growth. However, we are in the pipeline of finalizing or adding an incremental 300 to 400 beds in the Secunderabad hospital campus itself. We should complete the ideation in the next 3 to 5 months. Once it is done, we will probably announce that to the market if we decide to go forward with that.
So before the bed addition comes in, you can grow double-digit EBITDAs in this portfolio?
No, so I think we've been very clear in our communication always. Telangana and AP, very difficult for it to grow in double-digit. It will, even with capacity addition, it will only grow at a single digit. Okay. Where we are confident that the growth will come from is Sunshine and Nagpur, which is on the table today. So the next 24-36 months, AP Telangana will grow at single digit. The balance growth will get from Telangana and Nagpur, from Sunshine and Nagpur. Subsequently, after 24 to 36 months, you will start seeing a lot of the contribution that will come in from Nasik, Bangalore, and so on and so forth.
So your new asset will come 24 months down the line. The Nasik and the Bangalore will get operational?
Both of them will be operational in FY24 or the last month of FY24 or the early part of, the last month of FY24 or the early months of FY25. But it will take some time to stabilize. So hence we are not expecting any incremental contribution for EBITDA for the next 24 to 36 months.
Okay. And lastly, sir, what is your pro rata share of the EBITDA which is reported in the 9 months? So adjusting for minority share in the EBITDA, 80% or more than that?
It is 12.7% for the minority interest, Prakash.
Okay, so 88% of the EBITDA which is reported, let's say the EBITDA reported was 9 months is 420 crores. In that, 88% is the KIM share, right?
Correct.
Okay, thank you very much, sir. Thank you.
Prakash, see the slide number 31, we have disclosed that 12.7%.
Okay. Sorry, I didn't see it.
No problems, Prakash.
Thank you. Bye, sir.
Thank you. Our next question is from the line of Sagar Shah with Phillip Capital, PCG. Please go ahead.
Okay, sir. I just had one follow-up question actually. The gastro unit which we are looking to build in this FY24 in Visakhapatnam, can you give an overview regarding that? What is the bed capacity and how much will it contribute?
So it's, I'll just give you a little bit of background. In Vizag, we have one hospital, Vizag has two big micro markets. One is where we are currently present and we're doing extremely well. The other side is where we want to be present in the future. Now, in anticipation of being able to build a good flagship facility in the newer part of Vizag, but it's a long haul. It will take at least 4-5 years even before we start that facility. We're still in the ideation phase and looking for land phase. But we have a good clinical team which has a very strong potential to be able to scale things up and be able to grow. So we said we will make this small investment in being able to start this gastro unit because we believe there is huge potential in that micro market. And before our larger campus is ready over the next 4-5 years, we will be able to capture a significant share of the gastro market there. And once the new facility is there, we can then look at incrementally moving this into that new facility. So that was the intent for starting this. It also acts as a feeder into our other facility, which is in Vizag, for the other specialties other than gastro. So it's just a 35-bedded hospital with special focus on gastro, but it also gives some support to the other facility to be able to see some incremental volume.
The gastro unit. Okay. So actually my final question was related to this your acquired assets and your mature assets in AP. So are you sensing any, you had said before on the Concall that your mix is changing from the Arogyasari patients to the normal cash and the insurance patients over there. So are you sensing that in your acquired and matured assets? So can we expect at least an improvement in ARPOB for these two, for the Andhra Pradesh assets in the next 2 years?
So Sagar, as far as the AP acquired assets are concerned, so they are delivering something like that 20% of the margin. And we expect those margins to grow to the AP matured trajectory in next 12 to 18 months time as the revenue grows up and we do the rationalization in terms of the addition of the specialties and the payer mix, both.
Okay, so you're not expecting any improvement in ARPOBs. Do we expect the ARPOBs to remain the same?
Transplant program and other mother and child program and other interventional pulmonology program, etc., whatever the Dr. Abhinay has just told. Once we add that, you will see the ARPOB and ARPP both going up.
Okay. Sure. Thank you so much. All the best for you.
Thank you.
Thank you. Our next question is from the line of Rishabh Sisodia with Samiksha Capital. Please go ahead.
Hello. Thank you, sir, for the opportunity. Am I audible?
Yes.
Just on the IP volume side, so given you already mentioned on the Telangana and CP that there would be a mid-single digit growth, that is what we are expecting. So over a longer period, so given the Sunshine and Nagpur will be taking the lead, so on a blended basis, should we assume that the margins stay in these levels for the foreseeable future? Because after Nagpur and Sunshine get higher margins, we would be having Bangalore and Chennai and probably Thane as well. So a blended basis should stay in this ballpark number. Is that a sense?
Very difficult to say that. It depends on how the ramp up in those hospitals happen. I think what we will appreciate is if you can actually break down these into clusters and maturity profiles and look at whether the hospitals that we've been able to start within 48 to 60 months have been able to get to a stable EBITDA margin is what we would want all of you to pay attention to or focus to. At a group level, it may be, there will always be ifs and buts, right? So I think it's better to look at micro details than at a very group level. And hence the reason why we kind of bifurcated into these many clusters and showed the data.
Okay. That's it from me. Thank you.
Thank you. Our next question is from the line of Mr. Piyush, individual investor.
Sir, two things from my side. Sir, one, the Sunshine is having an average revenue per patient is around some 2 lakh rupees. and the ALOS is also on the 3 point something, which is lower than the overall average. But still, this makes a 20% of margin. Any specific reason the overall average revenue per patient is higher than all the other hospitals?
It's because the occupancy is low, Mr. Piyush. So, see, it's a very heavily orthopedic dependent brand. Even today, 50% of their volume comes from orthopedics. The length of stay is usually 2 days, 1.5 to 2 days. And the pricing, because of the implant and all, is high. Hence, the ARPP is high and the ALOS is less. But because majority of the volume is still ortho and they're only at a 40% occupancy, they have not been able to progress. In fact, this is after KIMS got in. When we had acquired it, it was only at a 10% kind of a margin. So we fixed that and we got it to 20. Now, as occupancy goes up, your operating leverage will play in.
Okay. So the average revenue per patient is higher because of the implant cost and all, which is actually a pass-through cost. That's why the overall number looks on higher side. Is it correct?
Correct.
Okay. Second thing, on overall, sir, what is our thought process with respect to addition of new hospitals? Because we are acquiring hospital also with a collaboration and stake of around 50-60%. We are doing greenfield expansion also at Bangalore and Mumbai, Maharashtra, and Chennai is on hold. So what is overall perspective to free cash flow and the payback period of hospital? How do you see which is the more suitable thing for KIMS to go into the partnership collaboration model or a greenfield model? Because the greenfield asset will also take time for giving the same level of EBITDA, and the free cash flow generation and payback period will also start a little bit of late. Just color on this. What is the thought process?
From cash flow point of view, I'll let Vikas speak, but from a strategy point of view, see, our approach is now that we have presence in AP Telangana, we want to create a mark in Maharashtra, Karnataka. There are few micro markets that we want to definitely do a hospital because we believe it will do well. So when we look at those micro markets, we will first look at an acquisition opportunity. But after we exhaust opportunities of getting something in an acquisitive nature, we would then definitely want to go in a greenfield format, because if not, we will lose out on that opportunity. So that is how we've usually thought through and have in the past executed all the acquisitions. But our first preference is definitely to do an acquisition if we get the right facility, right size, and the right clinical team along with it. But if we are not able to after a considerable time, we will then pursue the greenfield route in that geography. And I think a good mix of greenfield and acquisition is healthy, because there is certainty on what you're doing, and acquisitions are always uncertain whether they'll happen, not happen. But with this pipeline, you're certain as to how the growth will happen in the company.
Okay, last thing from my side, sir. We are also trying to go into the central and eastern markets like Indore, Raipur. We are having this aspiration of Odisha and Bhubaneswar and all, and there are some pipeline also there. So when we can see this, right now we are doing a 500 odd crore of quarterly run rate revenue. In 2-3 years, can we say we can be able to touch 1,000 crore revenue run rate? Not a guidance like, but just what is your thought? In 3 years, 4 years, with hospitals right now in the development stage, maybe FY25, 26, all will come and all will contribute to the revenue.
Right now we are doing 180 crore revenue per month, around 180 per month. So I think
correct. So that is what around 560 odd we did last quarter, and September and December also we touched around 560 odd revenue number.
Correct. I think with the 30% occupancy leverage in Sunshine and Nagpur, that itself will help us the currently run rate to go up by at least 10-15%. And then with incrementally Nashik, Bangalore facilities coming on board, I'm certain we should be there in the next 3-4 years.
Okay. Thanks a lot, sir. Thank you.
Thank you. That was the last question for today's conference. I now hand the conference over to the management for closing comments.
Okay, I thank you all for your valued presence. I would like to tell you that the questions raised by you in these meetings are very, very valuable and vital to help us in steering the growth of our organization from time to time. It has been a constructive and a positive contribution from your end in these meetings. I thank you for all your vibrant participation. Thank you very much.
Thank you, everybody.
Bye.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.